Trade Planning with Options, looking at light crude. This is Katie's great new segment where she's going to show you about putting on a bull put spread in the light crude market. And I think you're going to enjoy that, as she also illustrates using the Tastyworks platform.
Hi, I'm Katie with askSlim, and this is Trade Planning with Options for August 18th, 2022. The first trade idea we're going to cover is for an opportunity that may be setting up in crude oil futures. Let's take a look at that chart, /CL. This is a 5-year weekly chart, and you'll notice that we are in this weekly cycle timing window for this second minor third cycle. We have been moving steadily lower, and this week we bounced off that 61.8% fib level at about $85. So we are looking for crude oil to make this minor cycle low and then to begin to move up into the rising phase of this next minor cycle. Now, because this cycle that we're in is negatively configured, meaning it ends lower than where it began, we do not expect crude to be able to make a new high. We're projecting up into this resistance zone that runs from about 103 on the lower end to about 111 on the top. No sign of the bottom in here yet, and momentum is negative as shown with our proprietary momentum indicator, the Reversal Scout. Switching over to the daily chart, this is a 2-year daily, and you'll notice that we are also in a timing window on this time frame when we expect the current daily cycle to make its low and begin to move up into the rising phase of this next cycle. Now that timing window runs through August 23rd. We may have formed our cycle low right here. Today we are getting a nice bullish candle, but momentum on this daily chart is still negative, both a negative reversal scout as well as a negative slim ribbon, which colors the candles green, gray, or red depending on momentum conditions. Now, based on cycle phasing, we are going to be looking at a bullish trade idea in crude oil futures, but we would like to see momentum turn positive. Over on this 2-hour chart of crude oil futures, we have bullish momentum with both the reversal scout as well as the slim ribbon. So on the daily and weekly charts, crude oil has some work to do, and the best time to enter a bullish trade would be on a pullback after we have established positive momentum. So let's talk about some price levels. Over on the weekly chart, we've bounced off that major 61.8% fib at about $85. And on the daily chart, our next level on the downside is the top of this target zone at about 83.5. That is the 78.6% fib extension level. Let's go over to the Tastyworks platform, and I'll demonstrate setting up a simple short put spread in crude oil futures. So here are the expiration cycles, and you can see that we have implied volatility in here anywhere from 50% up to 63.1% in the various cycles, with an IV rank of 31. I'm going to choose the September 15th expiration, which is the last expiration cycle before the roll. And that gives us 28 days to expiration, which fits our analysis because we're looking for a move up now into the rising phase of that next cycle on both the weekly and daily charts. So a short put spread involves selling an out-of-the-money put and also buying a further out-of-the-money put to define your risk. Now, as far as which strike to sell, let's think back about our levels. The major 61.8% fib was at about $85. So let's sell that strike, and then let's buy the 84 strike to define our risk. What we want to have happen is for crude oil to stay above that $85 level and for time to just tick away so that these options lose their value and then we can buy them back for less than we sold them for. Now, a move to the upside will help that process along, and so would a vol contraction, which can occur with upside moves. So the notional in crude oil futures is 1,000. So we take our credit collected and multiply by 1,000 to see our max profit. So in this case, max profit is $320. And the width between our strikes is $1. So multiplying that by 1,000 means that this spread is worth $1,000. With a max profit of $320, our max loss then is $680. Now, of course, you can make the spread wider if you want to collect more, and that will also increase your risk. You can make the spread narrower if you want to reduce your risk, but you'll also collect less credit. And of course, you can move the entire thing closer to the money or further away to make it more aggressive or more conservative. I'll post an option strategy trade sheet on the website as well as on the Discord server with some additional strategies that would be appropriate based on the analysis.
Love that, Katie. Just absolutely love putting all of that work together and then showing option strategies. And Katie will be posting more than just this one strategy, as she said, in our Discord channels for our members. So you'll be able to get a much wider perspective of what type of strategic approaches you could put on for a trade like this. So just absolutely great work.